Let's talk about liquidity sweep or run. In this video, we're going to talk about liquidity sweep and run because the market always moves in different ways. Sometimes you will think that the market is going bullish, but then there will be a previous high here while the market is trying to take it out, and then the market will continue to move to the downside. This mostly will be caused by something like a fake breakout, because I know most of you uses some sort of a trend line or support and resistance. So in this video, I want to cover everything so that you can understand how the market behaves most of the time. So from here, guys, we can see that we have a bullish trend and then we have a bearish trend over here. But overall, the market will either do one of the two things. Most of the time in a bullish trend like this one here, you will see that there will be a low here before the market can continue to the upside, so that the market can take this low out for the sell side liquidity before we can see another bull run to the upside. So that's how the market behaves most of the time. And sometimes you will see that someone will say this is a higher high and then we have a higher low, but then the market silently breaks this low and then they will think that this is a change of market structure. It will be something like this. Someone will say this is a change of market structure, then the market will just consolidate here and then they will believe that the market will continue to the downside while the market can still shoot to the upside. This was just a liquidity sweep. The market was just taking orders before it can continue to the upside. Most of the time you'll see this when price is trying to reverse. And guys, most of the time here, the market will come in an aggressive, or maybe it will be very impulsive. The market will be very impulsive here. Then this is why you should be looking to make your entries. And sometimes, guys, even in a bullish trend like this, we have a higher high, we have a higher high, we have a higher high. This low here can still push and break even this one here. It can even take out two lows before the market can continue to the upside. This will be a liquidity sweep. And then sometimes you will see that the market will just break and then consolidate here, and then price will continue to the opposite direction of the market. In this way, this one here will be the run. This one will be the sweep. You have to understand it in this way. So this mostly the liquidity run here. This is where the market will change direction, but it doesn't mean the market will always do something like that. It can be that the market is trying to do something, let's say something like this. It was just consolidating here and then it was just trying to take out this low here so that it can sweep two lows, and then the market will continue to move to the upside again, and it can even break this high here. So that is how you should understand how to at least try to read the candlestick, because they are holding more information than you can think. Here in a bearish trend, it will still look the same way. Even if we have a bearish trend like this, the market can still trade above this high, because over the internet, we have seen that if you see a bearish trend, it should look something like this. But in reality, even if you trade the 0.618% of the Fibonacci retracement around here, the market can still trade above your retracement, because those are the tools that we use in the market. The only thing that is important is just pure price action. For more practical example, guys, it's something like this. Let's say you have your Fibonacci from here and then to here. This is your 0%. Maybe let's say this is your 0.618. This is your 0.38% here. The market will just retrace and then it will push above your 1%. And then you'll start to think, okay, this is just a breakout. But it is not a breakout here. This was just a liquidity sweep here. The market was just taking orders from this high here. Then the market will continue to move to the downside. But in a more sensible way, guys, sometimes it does not do something like that. Sometimes it can still consolidate around this area while you think this is a sweep. But this was just a continuation for the market to continue to the upside. This is just a reversal. But most of the time, if you want to see them properly, when price reaches this area, you have to consider reading price action, because it will tell you a lot of information. Mostly the candlestick patterns, you have to understand them very clearly, because they will tell you a lot of information. But when we move forward, I'll try to show you some examples so that you can at least see the light. Here, this is a liquidity on a chart. From here, we can see that we have this previous high here, it was taken and then the market shoot to the downside. But if we look clearly on this area, we can see this is just a push to the downside. The market was trying to push to the upside, but then it got rejected immediately. That is why you see this reversal candlestick here, and then followed by a bearish engulfing candlestick. That is why you see this move shooting to the downside. Even in here, you can see price swept this area here because there were two main orders here, but price came to this area and do something like this. It did something like this, and then it was correcting around this area, and then followed by another trend to the downside. You can clearly see this area here that the market was just making some funny moves. Okay, that's how you should understand it. Always read your price action very clearly. This area here is not the same as this one because this is a huge rejection. This one is a minor rejection. We can have this huge bullish candlestick and then have a slightly minor rejection here. Here we can clearly see that price was just fighting here. There is no valid reason to sell around this area. This was just a swap and then a continuation. That is why you see this bull run again. And if we look closely here and here, they almost look the same because we can clearly see that we have a rejection here. This is a rejection candlestick, and they can also be on the same different color, or this they can be in different color or even the same. But as long as you can read price action the right way, it will tell you a lot of information. Even here, we can see that we have a rejection candlestick and this is a bullish. Even here, we have a rejection, but this is still a bullish candlestick. But if we draw them clearly, they are something like this without any color. Consider this. Here we can see that this is just a rejection. This is also a rejection. It's just that time is very fractal, guys. That is why you see, maybe let's say the market didn't have a lot of time to close properly here, if I may say it in that way. Even here, guys, if I draw like 3 different candlesticks like this, maybe let's say this one is having a higher wick, this one is having a higher wick, and this, and then we have another one like this, and then we have something like this again, maybe something like this. These 4 candlesticks tell a different story. This one here, it shows that price is trying to push to the downside. This one here, they are still fighting on the market. This one is pushing price to the upside. This one here is pushing price to the downside. We can see it clearly here, even in this area here. This is the same as this one here. You have to read price action in that way. You can even clearly see that this candlestick here is the same as this one here. But that is why you see price pushing to the downside. I hope you understand this candlestick patterns that I drew here for just example purposes. Okay, I hope I am very clear on that one. Even guys, if I point out this, let's say we have this candlestick here. If we look closely, this is a bearish candlestick here. But if we look closely, it's the same as this one. This wick is smaller than this wick. We can clearly see this wick is smaller than this wick. That is why you see price pushing to the upside. You can see the arrow here. But enough about that. We will cover this on a different video. So let's continue with a liquidity on a chart. You can clearly see that we have a sweep in liquidity and then followed by a price action here. You already know what this means. Even in this area, we have a sweep and then followed by a price action. This one, I won't even consider it because there is not enough rejection room here. Even this one, because we still have a huge bullish candlestick here. Even this one here, even if we sweep the liquidity, but this candlestick will tell me a different story. Here we can see that we have a sweep followed by a minor rejection and then followed by this huge rejection here. That is why you see price shooting to the upside after sweeping this liquidity here. Here we can see that there is no rejection here. That is why you see a bull run here. This is just a bull run here. Okay, I hope you understand it very clearly because this is not something new, but you have to understand that every time when price reaches your, let's say maybe you are trading support and resistance, this is your support here, and then this is your resistance here. Then if you see that price is doing something like this, it's playing around like this, let's say this is your high, always focus on this highs here and then read price action here. You have to read price action here once price trades above this high here, and then you can trade this one. Even if price breaks this here, you have to focus on this area here. Okay, and always read price action. This is something like this one here. When we sweep the liquidity, always read price action. Even in here, you'll just have to read price action around this area. Even on this area, it's just you'll be believing that this is a sweep, but then the market runs to the downside to sweep this liquidity and then make some price action here. That is why you see a huge bull run. And you can see that we started this structure here, and then we have the bigger one, and then we have the whole structure. We have the whole structure here. Okay, so that means we have the first structure, we have the second structure, and then we have the third structure. They all behave the same way. So let's look at another example. We have liquidity sweep and run when it's not available. And when it's not available, guys, you'll clearly see the price action, how it behaves. We sweep and then minor price action. We sweep and then we get price action. We sweep and then we have price action. That is why you see price likes to sweep and then make some price action. Here, there's no valid price action. It's not even clear. And then we sweep again. That is why you see price shooting to the downside. But then from here, we have this low and then we have this high. Let's clear everything. We have this high, we have this high, and also we have this high here, and then this low, low. But here, there is no sweep here. Price is just making a structure like this. Price is just making a structure like this one here. So from here, you will be waiting for the market to make at least one move to give you a setup. But the market can still do some silly moves. Sometimes this one here, this is a reversal pattern. The market can still do something like this. It can break to the upside, correct, and then move to the upside. Or then can shoot to the downside, correct, and then move to the downside. That is why you see this bearish move to the downside. Okay, I hope you understand it very clearly. Guys, I hope you are subscribed to the channel. I guess I'll see you on the next one. Stay safe, use a stop loss, and also follow us on Discord and Telegram.